Hey guys, thanks for checking out my course, Penny Stock Trading, Analyzing the Most Profitable Stocks. Now, this is just a little preview of the course, and I'm going to go through a little bit of the curriculum, but basically, if you're trying to get into penny stock trading and you want to make real money, and I'm talking about 4, 5, 6 figures with penny stock trading, then this is the course for you. Alright? I'm sure everyone has either a friend or a family member who has dabbled in penny stock trading, whether or not they've done it themselves or did it on a tip of another individual. You probably know someone directly who has either made a lot of money penny stock trading or made a little bit or even lost money. But I think what you'll notice is that for the most part, some people treat penny stocks as almost like lottery tickets, and they go off of a hot penny stock tip or just off of some news that they read online, and they try to just throw their money in. Okay, that's not how you're gonna get rich. Okay, it's not a get rich overnight scheme. You can double your money in a single trade, and you can triple your money in a single trade. And in these courses, I'm going to show you how you do that. But it doesn't just happen out of luck. Alright, and that's what I'm going to teach you. Okay, I'm going to go over what actual profitable, the top ranked traders in the world, the methods that they use in order to make money trading penny stocks. I don't think I need to tell you how much money people on Wall Street make, okay? 7 and 8 figures salaries and compensation is on the low end in Wall Street, and because of the fact that they make so much money trading. Alright, so what I do is I help you take those strategies and bring them down to the penny stock trading world, which is more affordable for the average trader like you and I. Alright, so let's just go over a few of the courses. Alright, in this course we're going to be going over the basics. Alright, going over how to understand support and resistance points. Okay, now don't worry, it might seem overwhelming right now, but as you watch the videos, you're going to understand everything. I break it down for you step by step, and I give you the entire A to Z for it. Alright, anyone can take this course. Alright, you don't need to even have a high school degree. Alright, that's how simple I make it for you guys, okay? Because it's just very intuitive. Alright, I'm going to give you all the resources you need. I'm going to give you all the information you need, all the patterns that are used, okay? And by watching my course and by understanding it, you'll be able to have all the tools you need in order to forecast penny stock prices and in general stock trading. So you'll have a much better understanding of the stock market and how to make money off of it. And to be honest, now is the best time to get in, because if you go on to Yahoo Finance, if you go on check any financial newspaper, you'll see that the stock market is on fire right now, and it is the best time in world history to make money with the stock market. So I hope you guys like the course. Definitely check it out. Oh, and as an added bonus for watching this, if you use the coupon code VIP50, you'll get 50% off right away. All you do is go to the screen, click on redeem a coupon, put in the code, and you'll get 50% off. So I'll see you guys inside. Hey guys, this is a continuation of the technical and fundamental analysis module. And in this video and this series of videos, I'm going to be going over more concepts related to technical analysis. Okay, so now as a recap, technical analysis when it comes to penny stock trading always refers to the charts. Okay, so no matter what resource you use or what software you use, a very important tool that you must have access to and that you must utilize while trading are the charts of the historical prices of a stock price, because based on these charts and based on their historical patterns, you will be able to know the future trends. Okay, and it's a very important tool. It's called technical analysis. So whenever you hear that term on the forums or the chat rooms or anything, if I ever mention it, always think charts. And this is an example of one. Right now I'm using Yahoo Finance, and this is a chart of Fannie Mae, FNMA, but it doesn't really matter. It's just any chart you can use, because on every single chart, and as I discuss in my How to Research a Stock in 5 Minutes or Less module series, it's very important that you find the points of support and resistance so that when you're trading and when you're looking at a stock and seeing whether or not you should enter it and whether or not you can make profit off of it, it's a very good tool. All right, and it's a very good tool to analyze whether or not you should put that stock on your watch list and whether or not you can determine at what points that you should buy or sell the stock. All right, so it sounds a little confusing, but let me get right into it. All right, we're going to start at the very basics, which are two concepts known as support and resistance. Okay, support and resistance. So support is basically the lowest point that the stock will go before it bounces back. All right, so if you're looking at this video right here, these are the points where it's pretty much the valley, all right, the lowest point where the stock goes and then it bounces back up. So you can see right here, whenever it gets this low, it seems to bounce back up, and that's known as the support point. All right, now the reason that's important is because that, as a trader, nothing is guaranteed, but you have to use the tools at your disposal to be able to understand when are the best points to enter a trade. Okay, so for example, for those of you who engage in dip buying or swing trading, what that involves is waiting for the stock to get to its lowest normal point, so the point of support, and then you trade it because you know the stock price is going to go back up. All right, the psychology behind these points is that this is the point where people have their bids placed in. So they place, it's all about the self-fulfilling prophecy. Sorry, self-fulfilling prophecy that I mentioned before, okay? Traders trade based off of what they think is going to happen in the market because that's what influences the price, The price is based off of the moves that the market makes and the supply and demand of the market. So when people see that, all right, Fannie Mae doesn't get lower than this point, it seems like around 3.76 or 3.8, right? The stock price won't break below that. So they know that that's a safe place to buy because if you look at historical prices, you can see that this is a safe place to buy. Now, it's important to realize that technical analysis can be done on any indicator of time, or any range of time, any range of time. So as you can see here, right now I'm looking at the 3-month chart, all right? But you could even go and look at the 1 month, all right? And you'll see support, right here. As soon as it hits here, it goes up. As soon as it hits here, it goes up. As soon as it hits here, it goes up. And that's what support is. That's where you can kind of feel confident. And again, nothing is guaranteed. But that's where you can feel confident that this is the point where the stock isn't going to go below. All right? But understanding that rule of support and that concept of support is vital to understanding how huge movements in stock prices occur. All right? So as an example, let's go back and look at the 3-month, right? What happens here, the reason for these huge dips, right, is when a stock breaks the support, all right? When a stock breaks the support, people lose confidence in that stock because even though because that certain price is supposed to be where the stock is safe. So if I believe that the support point is 3.7, all right, $3.70, and that the stock is never going to go below $3.70, then that's my support point. And if the stock price goes below that, then I lose confidence in the stock because, it just broke its support point. Now I don't know if I can trust the stock or not. And what happens is everyone feels that way. Everyone loses trust in the stock and they start to sell it. And the price plunges, as you can see here. And that's what we call a breakdown. Okay? So in the same way, there's also concepts known as resistance. All right, like I said, support and resistance. Now resistance is basically the exact opposite of that. Resistance is the highest point that a stock gets to before it goes down lower. And think about it, resistance. The price wants to go up, but it faces like a wall of resistance, and it can't pass it. It can't break through that point. All right. And so that's why we call it resistance. And again, it all depends upon the range of time at which you look at the stock price. So when you're trying to determine points of support and resistance, you want to look at a variety of different time ranges. So that's why Yahoo Finance is a really good resource, because you can look at the 3-month range, 1-month range, you can even go back to a year. All right. Technically, that's the furthest back I'll go is 1 year. Especially with penny stocks, you don't need to go. So if we look at the previous day, right, you can see that there is resistance at 4.3. Every time the stock goes or tries to go to 4.3, it doesn't pass it. That's the resistance. It can't break through 4.3. And here's a key element and a tip or a technique or a strategy that you guys should memorize, is that the more a stock hits that point of support or resistance, the more you can be certain that it is truly a place of support or resistance. All right, so let me give you a perfect example right here. If you kind of look right here, I'll move my mouse, but you can look. The stock price gets stopped and faces a point of resistance at 4.3 several times, right? 1, 2, 3, right? At that point, I can be very confident, because it hit $4.30 3 times, that is definitely a place of resistance. Now, what does that mean to me? Now I know that if that stock is to break and go past the stock price of 4.3, that is what we call a breakout. And that is a catalyst, as mentioned in my double catalyst rule, and that is a very good indication that the price stock is going to surge up higher. All right, that's at these points. Usually when a stock breaks a point of resistance, that's when the stock price jumps up and there's a high volatility and a large amount of price change that occurs. So if I was to be trading Fannie Mae, right, I can see that on Friday, right, it didn't break 4.3. It kept hitting 4.3, but I would have set an alert every time it went for 4.3, and the second it hits $4.31, I would buy it, because usually that means that gives confidence to the stock, right? People trust the stock and see, oh, it just broke through its resistance. It's a strong stock. It's gonna go up. So as soon as it breaks through $4.30 and hits 4.31, that's when I personally would buy it. I would buy it at 4.31 and usually ride the wave. Okay, usually the stock is gonna spike up higher. All right, that's a good way. That's what I talk about when I refer to breakouts, and that's a very key, basic understanding of technical analysis. But it's extremely important, and it's simple. It doesn't. A lot of people think penny stock trading gets very advanced and very complicated, and there's traders that use all different types of indicators, but this is a very simple one that you can get from just looking at a chart. You don't have to run any equations or algorithms, and you can make a lot of money just off this rule, and this is what I use. I'm going to discuss in future videos all the different technical indicators if you're one of those people, and you can see right here, Yahoo has a whole bunch of different technical indicators that people use, all right? EMA and B-bands and money flow and MACD. Those aren't required. You can use simple support and resistance, and if you understand those, you can make profit off of penny stocks, all right? So definitely rewatch these videos until you understand what support and resistance are. If you have any more questions, obviously contact me at admin@inpennystock.com. I'm going to be making more videos that cover different chart patterns and technical analysis, because it's definitely key for penny stock trading. So I hope that helps, and I'll see you guys in the next video. Hey guys, in this video I'm going to cover a topic that I believe all traders need to know, and it's definitely something very important. It's relatively basic or intermediate, but I've found that some traders don't exactly know the difference between these two concepts. And of course I'm referring to fundamental analysis versus technical analysis. So in this video I'm going to cover what exactly those are, how they're used in stock trading, and why they're important. And I'm going to kind of integrate it into the strategy that I use on in my conservative winning techniques, and how I use these two types of analysis. Okay, so first let's cover technical analysis. Okay, technical analysis is the concept of analyzing charts and chart patterns and looking at the graph. Okay, whenever someone is talking about technical analysis, they're talking about analyzing historical prices and basically right here, how to read the charts, how to read the graphs. And that's something I go over a lot. I have a whole module on and a whole series of videos on chart patterns and basic, intermediate, advanced chart patterns, how to understand them, how to read them, what they mean, because interestingly enough, a lot of traders trade on technical analysis. And again, the reason it works is because it's almost, I know Timothy Sykes says this a lot, it's almost a self-fulfilling prophecy. So because of the fact that, again, the stock price is all dependent upon the buys and sells that people do upon the market. So because of the idea that the market believes in technical analysis and believes in how to read chart patterns, that's the reason why technical analysis works so well. So with my double catalyst rule, for example, or my breakout rule, if a stock breaks out a new high, the reason it shoots up higher is because everyone who follows technical analysis believes that it breaks out higher. And so they buy into the stock expecting a breakout like what happened here. Okay? So, when you're talking about technical analysis, there's concept like support, resistance. So you can see there was resistance right here at 57 cents, 60 cents. And then as soon as it breaks out, which is a technical analysis term, the stock runs up, and that's basically how you use technical analysis. Okay, and sometimes I just use simple resistance and support and breakouts and breakdowns. There's a lot of different terms, and different traders use some of these terms. There's RSI, relative strength, EMA, exponential moving average, and these are very some traders use these, and some are successful with it, others are not. I found that you don't need to go that in depth. It's not. That's why I've made these videos, because you don't have to be a financial expert or a statistical expert. You don't need your degree in. You don't even need to have gone to college. Okay, people started trading in high school, and I can. I have students who are high schoolers, and one middle schooler who I don't know whether or not to believe or not, but in general, these guys, it's not, technical analysis is basic. It's just reading a chart, and that's all that you need. Okay, now let's go on to the topic of fundamental analysis. Okay, fundamental analysis has to do with, in this one you need a bit more understanding of finance. Nothing too complicated, but this is where you go into the news, you go into the headlines. I have a whole video on how to read these news. There's a lot of headlines, and you might see several a day, and you need to be able to understand why they affect the stock price, how they affect it, and what it means, because news is a huge indicator of what the stock price and how this price action is going to occur, and the volume that's traded. I have a whole video on that, the intraday trading strategy of intraday news trading strategy, which is literally making gains, which is one of the most conservative and profitable methods of trading, by just knowing how to analyze headlines and keeping your eye on the news. Okay, but fundamental analysis goes a bit deeper into it. Okay, and this is Yahoo Finance. I love this website because it allows for easy research of stocks. Okay, so fundamental analysis goes into understanding what the company does, how they're doing. So whenever someone talks about fundamental analysis, they're going more in depth into the company, and they're looking at more of the financial highlights, or the the financials of the company. So these are all different aspects, and I'm gonna have a video, or I'm gonna come out with more detailed videos of how to analyze these financial statements, how to analyze SEC filings, which you can see right here, and this is all included in fundamental analysis. So they're both very important, though. Okay, so this is the income statement, an example of financial, but this is fundamental analysis. But now, taking this back to the whole trading strategy and what I do a little of both. Okay, with these penny stocks, again, you have to remember, we're not investing. We're not investing long term. We're just trading. Okay, you buy it and you sell it based on predicted price action, based on historical knowledge of how the market works. That is basically the essence of the entire trading strategy. you know that when a double catalyst occurs, the stock is going to go higher, so you buy it and sell it when it goes higher. And that's basically how it works. So what I do is I always look at the chart first. Okay, so I start off with technical analysis and then I go into fundamental analysis if I want to kind of trade the stock. So, watch the video on aim to not trade, where I discuss, the winning trade psychology. And in that video I discussed that, okay, I look at the chart first, but I look for every reason not to trade the stock. Okay, and again, if you don't understand why, watch the video. I go into every reason why not to trade it. And then if I can't find any reason not to trade it, I know that, okay, this is a great trade. I need to put it on my watch list. And then stocks that I put on my watch list, I go over the financials and I go into the summary just to get a bit more understanding of what the stock is and their company and how they're doing, just in case. And I'll go into videos I have videos that go more specific into the important aspects of fundamental analysis and SEC filings, and how to read news and headlines. So definitely watch those. You want to have a mix of both, and that's how you're going to be the most successful and the most profitable, and that's what we aim to be. So yeah, I hope that helped. And in the next video I'll be going into more about how you should look at news and how you should analyze it and how to determine these headlines here, these headlines and press releases, how to determine which ones you should keep an eye out on and which ones are important. So I'll see you there. Hey guys, this video is a long time coming, and I know a lot of you guys constantly ask me and the IPS team about it, so I'm just going to make a quick video about how to track the current pump and dumps that are going on. Alright, pump and dumps, obviously, as we discussed a lot before, they're the penny stocks that are currently being promoted through email blasts or separate promotion companies that basically just focus on hyping up the stock, so that the stock, they tell people either through their emails or texts or any notification, even calling. Back in the day, that's what the boiler room concept used to be about. They would basically get people to buy a penny stock off of some hot tip, say that it's going to rise for whatever reason, and because so many people are buying that stock, it ends up shooting up. So there's this website, Hey guys, and welcome to the introductory video for basic chart patterns. In these videos, I'm going to be going over technical analysis, chart patterns, and different types of patterns and what they mean. Okay, when you look at the stock price and the stock history, and graphs like this, there's certain things that the way the chart looks immediately lets you know, and it gives you a lot of information actually. Picture's worth 1,000 words, and for stocks, a picture could be worth $1,000 or $10,000 because I trade, and there's thousands, if not hundreds of thousands of traders that trade based off of technical analysis and charts and reading charts and analyzing charts. So in this video, I'm going to cover the concepts of uptrending and downtrending and what that means. So we're going to start off basic, but definitely, for you veteran traders out there, this is just a good refresher. And, we're going to slowly get more advanced as we go on. But for now, this is a chart pattern of PHOT, Thought. It's a weed company. And just like all weed companies at the moment, it is uptrending. And what that means is that, this is simple. You can tell that the stock price is gradually going up. Okay? For the most part, again, you have to look at the main story that a stock is telling. Okay, that's what technical analysis is all about, and that's what all these chart patterns focus on. Okay, it's not going to be one straight line that goes upwards. Okay, it's not going to be exact slope upwards, but you can tell, generally speaking, that this is an uptrending stock. And what that means is that what information this gives us is that the stock price is going up. Okay, this is a stock that is going higher in value over time. It is a nice stock. It is a bull stock. It is, if you were to hold it long term, barring all other information, it's probably going to go up. Of course, you don't just trade on that, because the other aspect of this and the other basics of technical analysis is that the chart looks different based on the time range. Okay, so we were looking at 1 year, and we can see over the course of a year the stock tends to be uptrending. But if we move to 1 month, you can see that the stock tells a different story. Okay, this is actually showing a different type of stock pattern. This is actually doing a head and shoulders, but let's not get too ahead of ourselves. Sorry, that's a bad pun. That's another chart pattern. That's an intermediate chart pattern that we're going to cover in the future. But generally speaking, you can see this is slightly uptrending, but again, you can't give this a complete definition. And you can tell I just want to show you guys that by looking at different time ranges, this is completely choppy. This is not giving any story to you whatsoever. So much volatility here. You can't tell if it's uptrending or downtrending, but I just want you guys to be aware that when you look at a stock, and this pattern tells you a lot about the future of the stock. Okay, past performance is indicative of future, performance and future returns, I guess. And it's something that Timothy Sykes might copyright that phrase. I don't think he's allowed to, but it's something that he says, and it's true about the stock market. It's true. Technical analysis is things that thousands, tens of thousands of people use. And by looking at a chart, you can analyze it by the way it looks, and you can gain a lot of information about that chart. So let's look at another stock now. Let's look at, I'm just going to think of a random ticker. This stock just recently got listed onto the NASDAQ, but let's just take a look at it. Let's look at the, 2 month. Okay, so just one little tip right here. If you ever see, for some reason, you put in a time range and the stock is just at a weird, it just starts like halfway through, what that means is that that's when the stock went public. So this stock actually just recently went public, so that's why it only starts right at that date. It doesn't go further back. But you can tell this chart on the 2 month timeline, it's downtrending, clearly downtrending. You could slide right down here, it's downtrending. That means that this stock is probably going to go down more. That's the assumption, and that's the analysis that you do. Okay, I'm not telling you to make trades based off of this information when you look at the general trend, but when you're wanting to learn the story of the stock and when you're researching the stock, this is how you do it. Okay, let's go further in, because again, this, when you go further out, okay, the longer the time range you're looking at, the longer type of trade or investment you're doing. Okay, so we trade within the same day or within the same week, or I trade sometimes within the same hour. Okay, so we want to go closer. So you want to go into the 5-day chart or even the 2-day chart. Okay, when you look at the 2-day chart, you can see that this is a downtrend. Okay, the stock is going down. When you look at the 5-day chart, you can see that the stock is a little choppy and everything. And this is a cup and handle almost. Not really, just a cup. There's no handle. But that's an advance. Sorry for getting ahead of myself. I just want to give you guys a little insight into what you're going to see in the future. And the fact that, yeah, this is obvious stuff. When you look at this, you can tell it's downtrending. But analyzing chart patterns gets a little bit more advanced, but don't worry, that's why I'm here for. That's why my videos are up. You can rewatch them as many times as you need. They'll always be up for you, as long as you remain a good member in standing. But that is, the basic chart patterns, uptrending and downtrending. I'm going to do a few more basic videos before we get into the more intermediate and then the advanced chart patterns. So definitely, watch these videos, understand them. You need to know technical analysis in order to be a successful trader, because the chart patterns tell the stories of the stocks. And based on the chart pattern, you are able to gain the information and garner enough of a hypothesis of as to whether or not you should trade this stock. So I'll see you guys in the next video. Hey guys, welcome to another video of the technical analysis module. In this one, I'm going to be covering the head and shoulders pattern and why it's something you must avoid if you're a penny stock trader that goes long. If you're a penny stock trader that enjoys shorting, then this is definitely one that you want to keep in your arsenal or your toolkit when you're analyzing stocks, because it's a very good point and it's a very good chart indicator that lets you know when a stock price is going to plummet. Alright, so let's get right into it. Again, I'm using Yahoo Finance because it allows you to see a range of stocks. A range of price ranges and time ranges. And the stock that I'm looking at is RLOC, RLOC, but again, it doesn't matter. I'm just showing you a chart, and I'm just sitting with you guys and analyzing a chart so you can understand what I mean by head and shoulders and why it's something you need to avoid. Okay? Now, it's one of the very prominent chart patterns that traders discuss. So if you hear of it or if you haven't heard of it before, definitely make sure that you understand this video, because it's important, and it's something that if you decide to become a penny stock trader, which I definitely advise, and which if you're watching this video, I'm sure that's what your motivation is to do. It's a chart pattern you need to keep an eye out for, because you'll see it time and time again. Alright, so in this chart that we're looking at, the head and shoulders is right here, right in this range. Okay, now the reason it's called the head and shoulders is pretty simple. This is the head and these are the shoulders. Alright, and as I stated before, and even the title of this video, why you must avoid head and shoulders. Alright, because I'm a trader that goes long in penny stock. This is what we this is all the videos, and my trading strategy is one that goes long. So if you're a trader that tries to buy low and sell high, then this is if you ever see this chart pattern, make sure you never trade that penny stock. If you're someone that goes short, this is what you should be looking out for, because this is a good indicator that the stock price is weak and it's going to plummet, and it worked out perfectly here. And let me explain the psychology behind it, because I don't want you guys to just sit here and memorize these patterns. This isn't school. I'm not trying to have you guys take down notes and memorize patterns. I'm trying to give you guys the understanding behind it, because that's what will make you independent, profitable, successful traders. So, the head and shoulders. Let me explain why it's a huge sign of weakness for a penny stock. All right, this is the motivation, and this is the psychology behind it. The stock price has a shoulder, right? It's left shoulder. It's a more historical price. And what happens is it breaks through one of its points of resistance, as we talked about in a previous module of the support and resistance video. It breaks through resistance and shoots up and hits a peak. All right, this one is a bit more rounded, but it can also be very pointy, like you see right here. All right, and that's the head, that's the top. Then what happens is it goes down and it still kind of stays a little bit. All right, it goes back down pretty much to the previous point. All right, and that's the second shoulder. Now, essentially what this is showing you is it's telling you that the stock has pretty much run out of juice. All right, it's pretty much run out of volume, and it's almost an indicator of weakness because of the fact that the stock is losing its momentum. It's not being able to be strong. And the reason I say this is because after the head, after the top point, the stock is not going to shoot up again. All right? Or again, as I always say in technical analysis, nothing is guaranteed, but what we're working with is percentages and analysis. And analysis and historical data show us that this stock has already run its course. If you were here beforehand and you caught this breakout and then you made your profit, you should have sold at the top and then get out, and you're done with this stock and you don't look at it again. But if you come across this stock and see that, oh, it has a shoulder and it's already hit its peak and now it's down, forget about that stock because it's just going to go down. It already had its huge breakout, and it's very rare that a stock has another breakout like that. So you should just forget about it and move on because there's so many better trading setups, as I mentioned in my other videos. Now, if you're someone who goes short, this should be a good stock for you because you can see that, all right, the stock already had its course. It already ran up. And right here, it's just hesitating. It's just barely, it's struggling to reach the historical point that it had before on its left shoulder. And it's a good indicator that you want to keep your eye on it. Keep your eye on the point of support because as soon as it breaks through the support, it's going to plummet, as happens right here. And if we can zoom in right here, I'm sure we can see that that happens again. Alright, this one is too narrow to really call it a head or shoulders, but in general, what you can see though, and what I want you guys to see from here is that after a head and shoulders, the stock price is a goner. Again, right here, it's failing to kind of go anywhere. You can see that it hits support a lot, and then as soon as it breaks support, it plummets. And that's typical of penny stocks. You're going to see this time and time again. Alright, so that's why I'd say avoid the head and shoulders if you're a trader that goes long. It's a huge sign of weakness for a penny stock, so stay away from those. Alright, so hope this helps. It's a little confusing, but if you watch the other videos on technical analysis, you'll get more of an understanding. And again, as you do more virtual trading, as you see more charts, as you actually spend more time trading, you'll understand this and you'll see that this pattern and this example of weakness that the head and shoulders exemplifies stays true time and time again. So hope that helps you guys. I do these videos so that you don't have to take the time in and pick up on this trend, okay? This is pretty much through years of trading and knowledge and researching that I've done, so I give you guys pretty much the spark notes of what to keep an eye out for, and I pretty much save you guys time, Yeah, you could pick this up information and trend up on your own if after months and months of trading, but now that you guys know this, you don't have to worry. If you see in head and shoulders, you don't have to experiment with it. You already know that it's an indication that the stock price is going to go down. So, hope that helps you guys. See you in the next video. Hey guys, in this video, I'm going to go over the green to red momentum shift. And what I mean by it, sometimes I refer to it in my videos, and I've gotten people who ask me what I mean by it, so I want to analyze what exactly it is and what it means. Okay, so the green to red, when I talk about that, I'm talking about the stock price and whether or not it opens with a gain, closes with a gain or a loss. Okay, and specifically, it means when you're looking at candlesticks. Okay, so candlesticks are a type of tool or way to look at charts, and candlesticks, what they do is they tell you the stock price, and if they're green, that means the stock went up during the day, and if it's red, that means it went down. So the green to red is a stock indicator. It's a chart indicator that usually means the stock is about to plummet. Okay, and it's something that a lot of shorters use to set up their shorts. Okay, I know that this is almost, Timothy Sykes has said it many times in a lot of interviews and a lot of his videos, that this is the main strategy that he uses when he shorts. Okay, when you have a stock that's been running up for a few days, okay, green a lot of the days, constantly closing higher day after day after day, and if you go back a couple of days, you can see that this stock has been running for about 4 or 5 days. Okay, the day that it closes red or opens red, meaning it opens at a lower price and it's trading at a loss than the previous day, okay, so whenever the stock price is red or the candle is red, usually that means that it's about to go down and the stock price is about to plummet. Okay, and usually, with this, I'm talking about pump and dumps. I'm talking about, chart patterns. I'm talking about people who use technical analysis. Okay, and this is a slightly more advanced. It's an advanced chart pattern, and usually when you see a lot of greens and then you see a single red day, that means the stock is about to go down, and that's when shorts reserve their shares and they start shorting the stock, and usually that's when the stock price plummets, because now investors or traders are, it's a sign of weakness in the stock, and because the stock is showing weakness, people don't want to trade it, and they're all just selling their shares. Okay, they got the run, the stock is done, it's done running up, and now people are trying to sell, and they're trying to get out of their position before the stock dips lower. Okay, so that's just something I want you guys to keep an eye out for. It's called the green to red. I call it a momentum shift. I guess I just got used to that terminology. It's the green to red shift. As soon as the stock goes from being a runner, constantly closing at a higher price than the day before, which are shown by these green candles, and so that happens a whole bunch, 3, 4, 5 days, maybe sometimes even a few weeks. And then the one day that it closes on a red, meaning closes lower than it opened at, that means that, or closes lower than the previous day's close, that means that the share is going to plummet. Okay, and again, nothing is guaranteed. You still have to follow price action, but it's a very reliable trading strategy. Again, 85, 90, I would say 90% of the time, after several green days, on the first red day, the next day the stock is going to plummet. Barring exceptional news or, hype or pump and dumps, where they try to send out another pump, that's usually a good indicator that the stock is going to fall. So keep an eye out for that. Okay, when you guys are about to get into a trade or about to look at a chart, make sure you go. What I like doing is like looking at the 5-day past, and I change it to 1 day. And again, if you don't know the tool I'm using, it's Equity Feed. Go look it up on. It's my ultimate stock screening tool. I have several videos about how to use Equity Feed. It's an amazing tool, so make sure you use it. But what I do is I change it to 5 days. I look at it on a single day basis, and I change the chart into a candle chart, so I can identify the greens and I can see, okay, here's the red. So if I was looking at this on the 25th and I saw, the last several days were greens and then it just closed on the red, I would definitely not go long the next day. Okay, you don't want to get in that trade. Even if there's good news, I still wouldn't get in that trade. That's not a good trade setup. It means when you see a green to red momentum shift, it means the stock is usually going to go down. So stay out of those trades. And if you're a shorter, that's when you want to start paying attention to shorting that stock, because you're probably going to make money on the short. And I advise you guys to look into shorting. Practice on a virtual trading account with ShareTrader or one of these platforms that allow for virtual trading, or paper trading, I think is the official term for it. And definitely try to experiment with shorting, because the green to red, this is a very, very good sign that the stocks are going to plummet. A lot of successful shorters use this technique. I know Tim Grattani, Tim Sykes, I know they talk about this technique, and it's a very reliable one for making money and predicting how the stock pattern and how the price of the stock is going to go. Hey guys, in this video I'm going to cover a very important concept, but one that some people have a little bit of trouble understanding, so I'm going to cover it in this video. Okay, today I'm going to be talking about low floats and what is a float and how does it relate to stocks and penny stocks, okay? So to understand what float is, you have to understand basically how the public markets work and how IPOs work, okay? When a company goes public, and every company that you see here, any company that we trade, or any company that has a ticker, which is these symbols here, that means that they are a publicly traded company, and so that means they have issued shares. And shares are basically small percentages of the company, ownership of the company. That's what they're supposed to stand for, okay? Now the thing is, a certain amount of the shares are held by the management, the people who created the company and who did the IPO. So there's a certain amount of shares that they're called restricted shares, and those shares are not traded in the open market. Those aren't bought and sold, through your E-Trade account. Only the outstanding shares, or not, sorry, only the shares available for trading are the ones that we can use. Okay, so the reason, so the formula for float, or calculating a low float, is pretty much you take the total amount of shares and you subtract, sorry, I don't want to get too technical or mathematical in this, you just subtract the amount of restricted shares, and that's the amount of shares that you have available to trade for. So say there's something, a penny stock comes out and they have 1 million shares. Okay, they have 1 million shares. However, the management and the shareholders are holding 75% of it. They are holding 750,000 shares. Okay, that means that only 25% of their total shares are available for trade. Okay, they have a low float. Okay, float is the amount of the amount of shares that are actually available to be traded on the markets, that are bought and sold through our retail brokerage accounts, E-Trade, Thinkorswim, SureTrader, whichever one you use. Okay, so a low float stock is a stock that has a low amount of shares available based upon their total amount of shares. So the way you identify low float shares is through a whole bunch of different ways, but one of my reliable resources is lowfloat.com, and that's what I'm on right now, and they go over stocks that are having a low float. And basically the reason low float stocks are so good is because they're so volatile. Okay, for those of you who have traded, okay, you might have noticed that for some reason some stocks, when they break out, they go crazy and they shoot up. Okay, they jump. They go from 201, 202, 207, 215, 217. They jump up. Okay, whereas some stocks, they go very slow when they go up or down. It takes a lot of time, and that has to do with the float. So those stocks with low float are the ones that are volatile, are the ones that during breakouts they shoot up, and that's the ones that are the runners and the breakouts. And Superman has one time said, "I've never met a low float that I didn't love." Okay, and basically the reason they're so good is because they're so volatile, and they're able to go high very quickly. But that also means you need to remember your rules and understand your stop losses, because that if they can go high quickly, they can also come down very quickly. But as traders, we make our money in the volatility. We make our money by the price range going up or down, and that's how we make our profits. So that's why low float stocks are very good, and something you just might want to keep your eye out for, so that that okay, this stock is a good stock that'll, if it has good news, or if it's if it gets a lot of demand, it shoots up. Okay, and so let me explain. I don't want to go so much into the theory. So if you don't really understand economics too well, don't worry, you don't need to. I'm just going to go into it quickly. It has to do with the principle of supply and demand. Okay, because there's a low supply of available shares, it creates almost an artificial imbalance. And that artificial imbalance allows for the demand to greatly affect the stock or the value of a price of a share. So, I just wanted to inform you guys on what a low float stock is, okay? Whenever you hear that phrase or term, now you guys will know what it means. It means that relative to the amount of total outstanding shares, there's a low amount of public shares available for trading, and that's called a float. So in this case, you can see there's 250,000, it's around shares in the float and 1 million outstanding. So that means there's about a 25%. So it's relatively low. It's a low percentage. Here's another 25%. Low float. Okay, this is 50% and not too low. This is pretty low. This is almost 10%. This is like a 15% float. Okay. Ignore this percentage. This is short interest, which I'll go into in another video. But whenever there's a low float, and if there's any stock that you see on lowfloat.com or you hear people talking about it's a low float, you can see it based upon the amount of shares that are on the float versus the outstanding. And if the amount of float is very low compared to the amount of outstanding, then you know that it's a low float stock. And so, keep your eyes out for them. They're very volatile, so keep that in mind. Hey guys, I wanted to make this video as a type of attachment to my intraday news strategy video because I definitely want to discuss and make sure that you guys know how to read and how to analyze headlines. Okay, so when you trade, you definitely need to make sure you're using Equity Feed's live news ticker and that you're keeping, Yahoo Finance open, or if you found a better source of it, and I might even have better tools for it, a better headline news service, basically, because stocks, especially penny stocks, they react a lot and very quickly to news, usually. Or, the news is able to spike or drop them very quickly. So you want to make sure that you understand how to analyze headlines and press releases and events or SEC filings so that you can tell how to react and whether or not it's important or not, because not all of these headlines are important. Some of them are just BS. And so I'm going to go through kind of a few examples with you so that you can get an idea of being more aware of what to look out for while you're trading and which headlines and press releases and news headlines are actually important. Okay, so this is a stock, TRTC. So I'm just using this as an example. This is Yahoo Finance. I'm just using this as an example of different headlines, and I'm going to go through with you so that you can see which ones are influential or not. Okay, so let's start off with this one. Why Terra Tech is well positioned for coming explosive demand. Okay, right off the bat, you need to be able to tell whether or not it's positive or negative news or neutral news. Okay, but you can tell that this is definitely a pro TRTC stock. Okay, it's well positioned for coming explosive demand. Now, not only is the news headline important, but the news source itself is also a very important tool, and you need to have knowledge of all the possible sources that Yahoo or all these websites pull their information from so that you know whether or not it's reliable. Okay, at the current moment, it's March 26, 2014, for the last year, and I can imagine for the next year and for a while, Seeking Alpha is a very important website that has a very strong control and influence over the price of stocks. Okay, when Seeking Alpha discusses a stock, the stock is most likely going to move. Okay, and this is because a lot of people are on Seeking Alpha, a lot of traders use Seeking Alpha, and they have good credibility. They almost have too much power over it, because you can see that today that this is going to have a large effect on the stock. Okay, it's probably a very positive. Okay, the news came out and the stock is up 10%. That's pretty good. If you caught the news, you traded the stock, and boom, you made your money. Okay, now you have to know that the Seeking Alpha is one of those. It's basically a site where people can post articles about stocks, and so yeah, it's pretty. There can be a lot of manipulation involved, and they select and edit and screen their articles, but this website at the moment has a lot of power and influence over the market. Okay, another website like this is called thestreet.com. Okay, thestreet.com is another website that has a lot of articles relating to penny stocks and they deliver news and headlines related to penny stocks, um, they're not as powerful in terms of influencing a stock from what I've seen as Seeking Alpha, but they're definitely up there, and you need to keep an eye out for them. And the third one is Motley Fool. Okay, some of you guys may have heard of it, some of you haven't, but again, Motley Fool, world's greatest investing community. There's a whole bunch of traders on here. These guys again are more long-term traders, but they still produce headlines and articles about penny stocks, and you need to keep an eye out for them because their articles, again, not as strong as the street, or definitely not as influential as Seeking Alpha, but still an important site. Okay, so you need to pay attention whenever there's headlines. You need to pay attention to not only the headline itself, and whether or not it's a positive or negative or neutral, but you have to take a look at the source and see whether or not it's real, in terms of it's a real article or not. Okay, and so those are the three: Seeking Alpha, The Street, and Motley Fool. Okay, now the other ones that you need to look out for are the ones that you've already heard of. Okay, and that is, for example, you can see here: Seeking Alpha, The Street, The Street. The other one you need to keep an eye out for is Bloomberg. Okay, Bloomberg, Wall Street Journal, New York Times. These guys have the attention of hedge funds and private equity. No, that doesn't matter. But hedge funds and traders and banks and portfolio managers. So these websites have the attention of the big people. People who have a lot of money and who can buy a lot of a certain stock. So again, you can expect. And hold on, let me pause right here and let you guys know. Don't just think that because an article comes out, the stock's going to shoot up. Is it likely? Yes. But you have to still follow all the other rules. Good news is just another catalyst, and we don't trade unless there's a double catalyst. And if you don't understand why, go and watch the double catalyst rule. It's a short video, but it's why I am able to, when I stick to my rules, which is the hardest part of trading, sticking to your rules, but I advise you guys to be better than I am. If you stick to your rules and do the double catalyst rule, you'll win about 95% of the time, or enter profitable trades about 95% of the time. So you need to know that when an article comes out, that's just a single catalyst, and then you have to see whether or not it breaks an intraday high, or whether or not it breaks an all-time high, or whether or not the market even reacts to that news. Okay, because a lot of articles come out and people have their attention all over the place. You might have seen this and thought it was important, but everyone might be trading a different stock or not have even picked up on this. So you have to watch out for that. Don't just blindly enter trades because they had a good news article. Make sure that you still follow your rules, but just know that this is a good catalyst, and now you keep it on your watch list and are watching it actively. Okay, so those are the news sites: Seeking Alpha, Motley Fool, of course Bloomberg, The Street. Those are the news ones. Okay, now this is kind of called like an aggregate service or a PR service, and what that means is that they kind of just pull news and they pull headlines and pull press releases. So these are usually affiliated with the website itself. So this redirects you to another Yahoo page. Okay, and whenever you see PR, that means it's usually from the company's investor relations department, which is the department of a public company that's responsible for kind of marketing the company and keeping the outside and the public aware of what's going on with the company. So a lot of the times you'll notice, or from what I've noticed, that PR Newswire, Globe Newswire, these types of headlines are not very important. Again, read the headline, and first, that's your first thing. Energetics appoints Mark Wallace, MD, as member of Medical Scientific Advisory Board for development of CBD-based nutritional supplements. Okay, that's not so amazing. Okay, so that is not really. Again, it's very possible that the stock gains attention because of something like this, but I wouldn't necessarily make this an active watch. I would still treat it like any other stock because this is aggregate news. It's not too important. Traders don't really give too much attention to it. It's just something to keep you updated, but definitely don't think that the stock is gonna go, you know, that's like a catalyst, but it's almost like half a catalyst. So definitely still pay attention to the headlines because the headline matters. If this headline said Energetics signs a contract with Apple or with Google, then yeah, it doesn't matter about the news source. This is going to shoot up. So just make sure you give equal weighting to both the headline and the news source when you trade. So I hope that was just a very quick video on how to read and analyze headlines. Remember that analyze both the headline and the news source. And I just wanted to make you guys aware of some specific news sites that very strongly influence penny stocks, especially recently. Seeking Alpha is one of them. When you combine a nice headline with a Seeking Alpha article, usually you get very productive results, especially recently. So keep an eye out for that. Still follow all the rules as I go over in the other videos, the required mandatory rules. But this was just a quick, hopefully insightful video on how to read and analyze news headlines. Hey guys, in this video I'm going to show you how penny stocks are made. Okay, I wasn't planning on doing this video because it doesn't really, this is just a bonus video to kind of increase your knowledge. But I was going through this 10K just on the side, and I noted something that is just so ridiculous. And the funny thing though is that it happens with all penny stocks, but it's just something that's been on my mind recently. The whole concept of reverse mergers, and I just want to show you guys, if you've ever thought, or if the thought has ever crossed your mind, how are these penny stocks made in general? Why are they such awful and crappy companies? And let me show you exactly what I mean by that. So this is a company, TRTC. This is Terra Tech Corp. Okay, this is a hot stock right now. It's almost like a weed stock. It's has a lot of peaks. I've made a lot of money with it. A lot of people have made good money with it. It has been being pumped and dumped, or in general, it's been hyped. But they just released their 10K. Okay, the 10K is the annual report that a public company, is required to file with the SEC once a year, and it's called the 10K. So I was going through it, and the first part of the 10K is always where they discuss their business. So that requires them to disclose, what exactly their business is. What do they do? So in this, they also go over a little bit about their history. So let me just show you this. Okay, so they were called private. Oh, sorry. Go back down. They were initially called private. Sorry about that. All right, I'm not gonna click. They were initially called Private Secretary Inc. Okay, and they were formed in 2008, and they were initially created to develop a software program that would allow for automatic call processing through VoIP. Alright, VoIP technology is voice over IP. That's like a phone thing, those corporate phone systems you guys have at the office to, call each other and to call out. That's what they were pretty much developing the software for. And then what they went through is something called a reverse acquisition. And it's a very complicated process, but it's a lot cheaper than an IPO. Okay, it's a reverse acquisition transaction through a reverse triangular merger. It has to do with a lot of accounting, a lot of finance, a lot of shares exchange contracts. But I just want to show you guys that these companies, the transaction happens in literally a month or two. And sometimes these companies have nothing to do with the reverse merger. And that's a good indicator that you know that the company is probably just is going to be hyped and sold for shares. Okay, the shareholders, I don't know if it's true. I could be wrong, but it doesn't seem like the management of this company had any interest in their new field. Now what they do is they engage in the design, marketing, and sale of hydroponic equipment with proprietary technology to create sustainable solutions for indoor agriculture. Okay, so they went from a software for phones, and then they did the reverse merger to become a penny stock, and now they're in indoor agriculture. Okay, to be honest, for me, that's really tough for it to be seen as a legitimate company. Of course, I don't know anything, but it's just something I wanted to point out to you guys in terms of how penny stocks are made. Okay, In future videos, I'm going to be going through how to analyze SEC filings, and I'm going to create a whole series as to what are the important parts of SEC filings. As you can see, they're huge, and they have everything. They have photos, they show the products at the grocery store. But basically, the 10K is a report for the investors to know everything about the company. So if you ever want to know something about a company, all you have to do pretty much is read its annual report. And they literally tell you everything. Like, they're required to disclose the amount of money they spend and who they do business with and what their strategies are. So it's just interesting to sometimes go through these 10Ks. I don't ever read all of them, but I was just going to go through this to see whether or not it would be a good stock to trade. In the next video, I'm going to be covering the important aspects of financials, meaning the income statement, balance sheet, and what parts of those statements and what data you should take out from that to know how the company is doing. So you can kind of get an understanding. Again, most of these companies won't be doing well at all, but it gives you a good understanding of how earnings should be. So if a stock is about to come out with earnings and you want to try to get a little understanding about the company, it's always good to go through the SEC filings or the financial statements to see whether or not, is this company going to show good earnings or is it probably going to be a waste of time. So I'll see you guys in the next video. Hey guys, a lot of people ask me, what information I pull from financial statements, or what information do I believe is the most necessary and most influential for the price of a penny stock. So I decided to make this video it's kind of like a beginner video to discuss what's important in a financial statement and what to look at. Now it's important to remember that when we're dealing with penny stocks, most of these companies are going to just have awful financial statements. And I guess by going through these financial statements, you'll be able to see exactly how awful they are and why you would never invest in them in the long term. But I just feel it's still necessary. You should have an understanding of how you're trading. Technical analysis is very important, but you should have some general basis for a fundamental analysis. And being able to kind of look at a financial statement, like the income statement or the balance sheet, and be able to just quickly scan it and know how to read it so you can kind of come to an informed decision about what is going to happen to the stock. So the only time this is really important is when a stock is about to have earnings, right? They're about to announce earnings, quarterly earnings or annual earnings, and you want to try to, you're just looking at the stock and it looks like a good chart, and you want to just kind of get a bit more information about whether or not you should put it on your watch list. So you go into the financial statements to see, do they have a chance of reporting good earnings, which would possibly throw it into the double catalyst rule, which is probably the best and easiest way to just sit back and make money in the penny stock market. So let me do a quick video using Yahoo Finance. I love this site. A lot of my videos are done on it. A lot of the popular penny stock traders use this site because it's so simple, and along the side it has everything that you need all in one place. So let's just get started. So in order to see the financials of a penny stock, you'll see it right here on the side. It's the last category, and it's called financials, and they have an income statement, a balance sheet, and a cash flow. Now, some people again do more in-depth analysis, but I've found it's not necessary. You only have to look at a few critical things. So let's go through that real quick. Let's start with the income statement. Now the income statement tells you how much revenue and expenses the company had. So, in basic terms, it tells you how much money the company made and how much they lost. So the important thing to realize, and this is one thing that even people who, I'm an accountant and a CPA, it's sometimes even accountants forget this. The figures don't really mean anything. None of these numbers mean anything unless you compare them to last year. Okay? Everything about accounting and financial information is all about comparisons. Are we doing better or are we doing worse? And that's how you tell the trend of a company, because even though people say, past performance is not indicative of future returns. You have to remember that, even when you think about human beings, when you trust someone or their credibility, that all has to do with their past. And you're judging someone based off of their past. So why can't you do that with penny stocks? But, alright, sorry for the tangent. Let's just go into the important numbers. Alright, so one important number is revenue in general, okay? If the penny stock is making revenue, that's kind of a good sign, because you'll see, this is a NASDAQ company, but it's plug. It's a NASDAQ company, but a lot of like OTC, BB, and pink sheet companies don't even make revenue. But in general, if it's making revenue, it's just a little plus for the company. But in general, the important number is net income. That's what people care about. Net income. Alright, if it's in parentheses, that means it's a negative. Alright, and this is 2012 and this is 2011. So when we scroll down, we can see that this year they had a $31 million loss. Whereas last year they only had a 20. Oh, and remember, all of these numbers are in thousands. Okay, so you add another 3 zeros. Whenever you're looking at Yahoo Finance and most financials, they're in zeros. So this is actually a $31 million loss compared to a $27 million loss. And what that means is that the company has a bigger loss, so it's being less profitable. So if this company was about to report earnings, I really wouldn't have much faith in it, because, again, it doesn't have good, income. It has a bad trend, Things can change, but again, I'm just talking about a quick scan. This is an introductory video on how to tell whether or not you should invest in it. Alright, and then the other thing I go to, some people go into the balance sheet. I used to go into the balance sheet. Let me just tell you how it looks like. But in general, the balance sheet, what I've noticed is that companies are able to manipulate it, especially these penny stock companies. I know that because I'm an accountant, so that's the income statement, it's a lot harder to lie in than the balance sheet. But anyways, the other thing you want to look at is the amount of total cash. Okay? Cash is always good. If it has a lot of cash, that's good. Some companies only have a few thousand cash. But that, again, you have to be able to compare it. So one thing that might be good on a balance sheet is to compare the cash to last year. That would be the only reason I would go to a balance sheet. And then finally, you have, after you click on key statistics, you have this information, which allows you to kind of see the float. And if you guys don't know what float is, watch my previous video to understand float and why low float stocks are amazing and can make you the most amount of money. So you can see here that it has 103 million shares outstanding, only but 89 million float, so that is not a low float, that's a pretty high float. So in general, again, let me just do a quick recap so you guys don't, if you just need a quick reminder. To determine whether it's a high float or a low float, you see the amount of shares in the float compared to the amount of shares outstanding. So if the number is similar, that means it's a high float. The larger the float, the higher it is, duh. But high float basically means that the stock is gonna move slower, because there's so much more supply, the price moves slower. But low float stocks, because there's less of a supply, the stock moves a lot faster and it's a lot more volatile. But yeah, that's pretty much my introductory video into, financial statements and financial information regarding penny stocks. I hope that helped. I'm going to get obviously a bit more intermediate and a bit more advanced, but that's just the basis that you need, and that in general can help you very much. Alright, well, that's the full course. I really hope you guys enjoyed it. And like I said, this is going to be a living course. So if you have ever have any questions or comments, simply leave a post in the discussion and I'll get back to you, and I'll either come up with a comprehensive video answer, or if it's a quick question, I'll just give you the answer right then. But I'm constantly staying updated with the discussions, and I really hope that you guys get a lot out of it. And the course is going to be available for you forever, so you can always go back and rewatch as many videos as you want and really get a fundamental understanding of of the techniques and strategies we use in order to start making a lot of money with penny stock trading. All right, if you put in the work and the effort, I can guarantee that you will make money. So if you liked this course, then I just wanted to give you guys a little insight into my Udemy profile. All right. It depends on when you're watching this, but I'm hopefully going to have a lot more students and a lot more courses and reviews in the future. But currently, my most popular courses are as below. Make Money Online Trading, Penny Stocks. That's going to be your introductory course to kind of teach you all the fundamentals of penny stock trading. Then we have Advanced Strategies, where you'll be able to get everything that you need on a high level. So once you understand penny stock trading and you're doing it, you've done virtual trading, which you'll learn from my other courses, as you can see here, then these are the courses that'll really take your trading to the next level. But you should take my other courses before that. And then I also have my VIP secrets. All right, these are all the observations and lessons that I've accumulated not only for myself becoming a successful penny stock trader, but in general from my colleagues who are also very good penny stock traders. So we've kind of collaborated and come up with the best courses. Now again, as another kind of exclusive coupon that I'm giving you guys, if you guys go to any of these courses and you're looking into purchasing them, if you use the coupon code VIP50, all right, VIP50, you'll be able to get 50% off. All right, so there's only a limited number of coupons, so definitely as soon as you check this out, go and check and purchase it right away, because the prices of these courses are only going up and up as more people demand them. Thankfully I get a lot of feedback from my students and they enjoy the videos, and I work really hard to give you guys the best content. So and I see the love coming back from the reviews and the amount of students that come day in and day out and give referrals. So I'm really thankful for that. Also, if you want to see more, I'm also the founder of inpennystock.com, which is basically a membership site for penny stock trading, and it has a huge library of videos. Right now, all you got was a taste, but this is the VIP section, and it's the VIP membership service, and it's a whole video library of tons of stocks and tons of videos that teach you exactly what you need to become a successful penny stock trader. So definitely come and check this out too. And I hope I see you guys soon. Take care. Hey guys, I hope you enjoyed the videos and the courses and you learned a lot, okay? Now what you have to do is you're going to have lifetime access to the course, so you'll be able to rewatch any parts that you would like to watch to be able to gain a strong understanding of the material, alright? Because especially in this industry, knowledge is not only power, but it's money, alright? And having a direct advantage from learning all these tips and secrets that I've covered in this course will put you ahead of 95% of other penny stock traders, alright? So you're going to be going in with a huge advantage, and you're going to be going in as a pro. Alright, but the time is now to take action, okay? You went through the course, you watched the videos, now you have to actually apply it. That's where you're going to make the money. Alright? So again, if you have any questions, you can put it in the discussion board, or feel free to reach out to me. I'm the founder, as I'm sure I mentioned earlier, of inpennystock.com, which you can see here. And this is where I put everything up, and you can learn as much as you want from here. And this is really, if you want to go to the next level and take things seriously, this is the way to go. And I definitely recommend you checking it out, because I'm actually having an amazing 50% sale until midnight on the VIP access, which gives you access to all my video courses, all my content, and everything. And if you want to get jump started right away, alright, if you really feel like you relate to the material and this is something that you can do, and this is something that you're interested in, then I definitely recommend the VIP executive coaching, alright? Now, this is only a very limited program that I have running, and it's a one-time coaching program, and it gives you access to everything, all the content, everything as you can see here. And it's, I think though that there's only one spot remaining actually. Yeah, and you actually get access to an additional VIP account, so it's basically buy one get one free. So if you have a friend or a family member, a spouse who wants to do it with you, who wants to learn with you and trade with you, and in general just go on this journey to financial freedom with you, then this is the program for you. So thanks for checking it out. Like I said, it's in pennystock.com. If you want to even get discounts or coupons, definitely check out the site, sign up. And yeah, I hope I helped. And if you have any further questions, you know where to reach me, either through the discussion board or in pennystock.com through the contact form, or you can email me at admin, which is ADMIN, at inpennystock.com. So I hope I hear from you guys soon. Take care.